Welcome. Today we're taking a mental trip to Africa to explore a fintech story shaking up South Africa, Lesaka Technologies. This isn't financial advice, just a look at a company transforming access to banking for millions left out by traditional banks. Lesaka's mission? Use technology to bring financial services to small towns and rural communities, helping shop owners get paid and grandmothers receive grants safely. Why now? Lesaka's been on a wild turnaround, buying companies, shifting strategy, and aiming to become a fintech powerhouse. Think of it as a comeback story, a company knocked down, now fighting to win. We'll unpack what they do, the African fintech boom, their financials, and the risks. So get comfortable. Let's dive into Lesaka Technologies, where technology, money, and people intersect in one of the world's most exciting markets. Ready? Let's get into it. Scene transition. Let's break down Lesaka's business. They have two main divisions, consumer and merchant. The consumer division helps everyday people, especially social grant recipients, access money safely, offering low-cost accounts, debit cards, airtime, bill payments, and small loans. The merchant division empowers small businesses, spaza shops, barbers, street vendors, with card machines and digital payment tools, plus business loans. The big move? Lesaka acquired Bank Zero, a digital-only bank. This gives them a full banking license and advanced tech, letting them connect consumers and merchants in a seamless digital ecosystem. Lesaka's goal: build a powerful, inclusive financial platform for South Africa's future. To understand Lesaka, zoom out to Africa's fintech revolution. For decades, traditional banks left millions unserved. Then mobile phones changed everything. Now people use phones for payments, transfers, and even insurance. This digital leap created huge opportunities for companies like Lesaka, especially with Africa's young tech-savvy population. But competition is fierce. Global giants, local startups, and banks are all fighting for market share. Success demands innovation, trust, and flawless execution. Regulation is another challenge. Governments must protect consumers without stifling innovation. For Lesaka, navigating this landscape is both a challenge and an opportunity. Is Lesaka's strategy working? Let's look at the numbers. After tough years as Net One, new leadership sold off weak assets, focused on South Africa, and made smart acquisitions like Connect Group. Revenue is up, more people and merchants are using their services, and they're nearing profitability. They've managed debt carefully, refinancing for better terms and stability. The Bank Zero acquisition brings digital banking tech and lower costs, boosting efficiency and profit margins. Lesaka's turnaround is real, growing revenue, cutting costs, and building a sustainable business. Every investment has two sides. Let's look at Lesaka's. Opportunity. South Africa's huge unbanked population means massive growth potential for digital financial services. Integrating their consumer, merchant, and digital banking platforms could create a powerful, sticky ecosystem. But risks are real. Integrating acquisitions is complex, and failure could mean higher costs and operational headaches. External threats, economic downturns, fierce competition, and regulatory changes could all impact growth. Lesaka's future depends on flawless execution and adaptability. High risk, high reward. That's the game. Stepping back, Lesaka's story is one of bold transformation. They've reinvented themselves, betting on digital, inclusive finance for South Africa. Their strategy: serve consumers, empower merchants, and connect everything with digital banking. The turnaround is working. Revenue is up, profitability is in sight, and investors are taking notice, but challenges remain: integration, competition, and economic uncertainty. Lesaka's success hinges on execution and innovation in a fast-changing market. It's a classic high-risk, high-reward story. That's the Lesaka story as of June 2025, a company with vision, momentum, and big ambitions. But remember, this isn't investment advice. If you're interested, do your own research, read reports, compare competitors, dig into the numbers. Knowledge is your best tool. And always consider talking to a qualified financial advisor before making decisions. Thanks for joining this deep dive. Stay curious, stay smart, and always do your homework.